Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is your weekly index review for February 16th, 2024. Starting off with a weekly chart of the S&P 500, we can see the S&P 500 was down slightly for the week. This is only the second down week for the S&P 500 coming out of the October 2023 lows. Volume was above average this week, but the S&P 500 was able to bounce off the lows of the week and is still trending above the 10-week moving average. And we'll dive into the daily chart to examine the action. Essentially, there was two big selling days this week that were driven by inflation numbers. The first was the CPI release on Tuesday, which caused a big down day in the stock market. The major indices were all down over 1%. The small caps actually got hammered on Tuesday. And then they proceeded to bounce pretty quickly coming out of that move lower on Tuesday. However, you can see the S&P 500 here is still struggled with that gap down on Friday and moved lower, without getting above that gap. And we'll dive into the NASDAQ 100 where the action was actually even weaker than the S&P 500. So overall, big gap down, potentially a warning sign here. We'll see if the market, continues to act weak off that major gap down on Tuesday. But the headline number risk from that inflation number is really what knocked the market down. And then the PPI number, producer price index on Friday, caused more selling in the stock market. The NASDAQ 100 was down actually the most this week. And technology, the large cap tech stocks have actually underperformed the S&P 500 now for 4 consecutive weeks. So there's definitely some, deterioration under the surface in these large cap tech stocks that have really led this market all the way back from the March 2023 lows. But the relative strength is ever so slightly starting to decline here. So perhaps with large cap tech leading for about a year now, there might be time for other major portions of the market to take over some leadership. And there was some rotation into small caps this week. But the thing to watch on these large cap tech stocks is on the daily chart here. You've got the Tuesday gap down, and then the large cap tech really sold off more on Friday. It had trouble with this gap down. So we'll see how this acts heading into next week. If we get a break below the 20-day moving average, then large cap tech, might be the first of the major indexes to start potentially moving into a correction, or at least digesting the recent gains. You can see the relative strength is starting to, again, like over the last 4 weeks, the relative strength has actually been weakening against the S&P 500, even though we're making higher highs here. NASDAQ Composite was down for the week, more than the S&P 500, so tech underperformed the S&P 500. NASDAQ Composite was also down on above average volume. This is actually the biggest weekly volume in 2024, and it was to the downside. So we'll see what that means heading into next week. But small caps did outperform this week. SMCI happens to be the largest component of IWM, and that certainly helped this index, although it's not a major component. This index is very widely split between small cap stocks. But you can see the massive volume that came into IWM here. This is really showing some increased speculative activity bouncing off the 10-week moving average, while the S&P 500 and NASDAQ 100 are perhaps digesting gains. So the market might be, heading into a more speculative phase, even though the large caps are digesting gains, which means there might be some more big moves to the upside before this uptrend is over. If you look at the daily chart of the Russell 2000, you can see how it really got hammered on Tuesday on massive volume, but it bounced off the 50-day moving average, 10-week, which is the 10-week moving average, and then it went higher pretty strongly on Wednesday and Thursday. Friday it pulled back on some above average volume again. But if we get a breakout in the small caps next week, then this uptrend in the stock market most certainly is going to continue. So that's really something to pay attention to heading into next week, is if the small caps continue to outperform. You've got the relative strength line down here. That would be bullish, obviously, for the stock market. And, the small caps haven't been in an uptrend since really 2020. So it's been 4 years of underperformance. So we'll see if there's finally some, rotation here, which could keep this rally going. Russell 2000 growth actually did make a higher high this week, got above that recent December high. So again, you're seeing lots of strength here on volume, bouncing off key moving averages, which is keeping this uptrend going. Now, in the last section of the newsletter, I'm going to talk about an adjustment to the timing model, and give some context around, what's really happened over the last month and a half. But basically, we've seen breadth decline now for essentially all of 2024, but the stock market has still climbed higher. And really the reasoning is because large cap tech stocks led this portion of the rally. So coming out of the October lows, it was a much broader rally. You can see many more stocks are participating in the rally all the way until around December. And then less stocks started participating for this latest portion of the rally, where NVIDIA and semiconductors really led, and there was much less stocks going higher. But the large caps were going higher, which is what powered this uptrend higher. So now, if the market's going to continue higher, we might see breadth actually expand again. And this would be led by, small caps as well, most likely because there's rotation into small caps. So we'll talk about the timing model and actually adding a trend indicator to the timing model to handle these periods where, large cap stocks are driving the market higher, even though breadth is declining. So breadth really is a good indicator to show you odds of success, because when breadth is declining, it means less stocks are going up, which means it's harder to find winning stocks. But the overall stock market can still continue higher when breadth is declining, because large cap stocks, are the major components of these market cap weighted indices that can still move the index higher, even though the majority of stocks might not be participating. So really large cap stocks are very important because, and I'm talking about mega caps really, those are really the most important stocks because they can drive the index higher even though other stocks aren't participating. And then finally, looking at the VIX, you did have, again, with the CPI news on Tuesday, you had an explosive move higher, lots of, kind of panic in the market. And then by the end of the week, we closed below the 30-week moving average. We're above the 10-week moving average. So we're still kind of indecisive here. We're still making higher highs, even though the stock market has gone up during this entire period. But we've been unable to really break out and kick off a correction. So the VIX has just been unable to really move, which is why the stock market's, still moving higher. So I think looking at heading into next week, you've got, potential for mega cap tech to continue to weaken. But if the small caps are where money's rotating into, you still might see some explosive action in this market. because of the rotation and the fact that the market's still providing some opportunity. Otherwise, if the mega caps really start to sell off, then the correction might kick off. So there's a couple options here, but you're definitely seeing a changing market finally. And if it's going to continue higher, we need to continue to see this rotation into small caps. And there's plenty of earnings reports still coming out, which could drive, more breakout activity in the stock market over the next few weeks.